All right, today we are diving into a very specific, time-sensitive investment opportunity. In the next few minutes, I'm going to walk you through the powerful market drivers, the project itself, what the potential returns look like, and, of course, the risks. And if it seems like a fit for your portfolio, I'll show you exactly how to connect with global investments advisor Marjan Island to explore it further. So let's start with two key numbers that really set the stage. So, first up, a 21% jump in residential prices on Marjan Island in just the past year. Now, that's not a forecast. That's what has already happened. It's a clear signal of a market that has some serious momentum behind it.
And get this, 12.6%. That's the peak gross rental income being generated right now from professionally managed short-term lets on the island. This points to incredibly powerful existing demand that investors can tap into today. When you see numbers like that, it really makes you stop and ask, is my capital working as hard as it possibly could be? This whole analysis is designed to show you a clear pathway for putting that capital to work, aiming to generate both steady income and long-term growth.
So here's our roadmap. We'll start with a big picture macro vision. Then we'll zoom into the Marjan micro market. We'll do a deep dive into the specific project, Le Château, and then build the investor case. And of course, we will cover the risks and outline the exact next steps. All right, let's get into it.
Okay, so the entire thesis here, the bedrock of this whole opportunity, is a clear, well-funded, government-backed strategy to turn Ras Al Khaimah into a global tourism powerhouse.
And right here, this is the absolute game changer. This isn't just another luxury hotel. The $5.1 billion Wynn integrated resort is a demand magnet. Its sheer scale and brand recognition are poised to fundamentally reshape tourism in the entire region. But here's the kicker, the part that really sets this apart. Wynn holds a 15-year exclusive casino license for Ras Al Khaimah. That makes this the first and only destination of its kind in the region. This creates an incredibly powerful and unique economic moat that other destinations just can't compete with. And this isn't just wishful thinking. The government is investing heavily to make it happen. They're targeting over 3.5 million annual visitors by 2030, and they're backing that up with hundreds of millions in new infrastructure, like a direct road link and a major airport expansion. This level of government commitment seriously de-risks the entire play for private investors. Okay, so that's the 30,000-foot view. Now let's zoom right in on the island itself, because this is the epicenter of where all that growth is focused. And the numbers on the island, well, they really tell a story. Long-term rentals are healthy, for sure, but look at the short-term rental market. Yields are hitting as high as 12.6%. This is the direct impact of tourism, and it's happening right now, well before the Wynn Resort even opens. And this, right here, is the core of the value play. You have the opportunity to enter a market at a price per square foot that's significantly lower than mature waterfront communities in Dubai. But all the fundamentals, the infrastructure, the tourism, the brand power, are rapidly catching up. Historically, that gap is where significant capital appreciation happens.
So we've got the macro, we've got the micro. Now, how do you actually capitalize on this? Let's take a close look at the asset itself, Le Château.
And here's what's so smart about this particular project. Le Château isn't a standalone tower. It is the very first residential building to launch in the brand new 250,000 square meter Evermore master community designed by the iconic Pininfarina. Being the first mover gives you a strategic advantage, securing ground floor pricing in a community that is designed for significant future growth. So let's get into the specifics. As you can see, there's a good mix of 1, 2, and 3-bedroom units offering different entry points depending on your strategy. And importantly, these are the starting launch prices, which allows you to lock in that first mover value. The payment structure is really straightforward and honestly, very investor-friendly. You secure your unit with a small deposit, then 50% is paid over the construction period, and the final 50% is only due upon completion, which is scheduled for late 2029. This is a great way to manage your cash flow. Of course, it's not just about the spreadsheet, right? The quality of the asset matters, and this project is being built to a very high standard to attract premium tenants. We're talking a resort-style pool, a large state-of-the-art gym, an executive lounge, even a rooftop viewing deck. These are the kinds of amenities that drive higher rental demand and resale value. All right, let's boil this all down to the bottom line. What could this actually mean for you as an investor? Well, this investment is structured to deliver returns in two primary ways. So you've got two engines driving your return here. On one side, there's the income path, targeting an 8 to 11% gross yield from short-term rentals once the property's handed over. And at the exact same time, there's the appreciation path, with forecasts projecting price increases of up to 58% by 2030 as the area matures. This is your capital working for you in two ways at once. Now let's be prudent and look at a few potential scenarios. In a bear case, with maybe slower tourism growth, the fundamentals still point to solid returns. The base case aligns with the expert forecasts we've been looking at. But in a bull case, where the Wynn Resort and the tourism strategy exceed expectations, the upside potential for both income and growth becomes really compelling. So you might be thinking, this sounds great in theory, but has a play like this, getting in early on a master community with a huge catalyst, actually worked before? It's a very fair question. And the answer is a definitive yes. Just look at the history of Dubai Marina around 2006. It was a brand new masterplan community with major infrastructure and lifestyle catalysts being built. Marjan Island is in a very similar early stage position today, except its anchor catalyst, the Wynn Resort, is arguably even more unique and powerful. This is a proven playbook for value creation. All right, no serious investment discussion is complete without talking about risk. It's absolutely essential to look at the potential challenges with eyes wide open and, more importantly, to have a strategy to manage them.
So, what are the potential headwinds? Let's tackle them one by one. Delivery delays are always a risk in off-plan, but the developer, Omniat, has an excellent track record. What if the rental market softens? Well, this property's prime location, right next to the main attraction, creates a protective moat. And what about new supply coming online later? The key is strategic unit selection now, locking in the apartments with the best views and layouts to ensure they always stand out.
So if this is looking like a potential fit, the path to securing a unit is very clear and straightforward. First, you work to define your unit strategy, thinking about the ideal aspect, view, and layout for your goals. Second, you submit the standard KYC documents. And third, you secure your chosen unit with a fully refundable 100,000 dirham expression of interest. Now, it's important to remember allocation is limited. And as the very first project in this master plan, these are the ground floor prices. To secure early allocation, get priority pricing, and gain access to the strongest units in the building, I would strongly recommend booking a private call with Munji Adlan now. You can use the booking link or simply scan the code on the screen. It's an opportunity to position yourself ahead of the curve.